All right, everyone, here we are with ticker symbol WWR Westwater's Resources Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Westwater's has been in a bearish run, but it's been getting quieter and leveling off to a sideways movement, believe it or not. I know there's some volatility up and down, but it's starting to move sideways. And the lowest point reached was actually on Friday at 393, and we're going to make that our new support. If it breaks through that, this could be on its way to newer lows, and it touched it twice. And we're going to look at one of the highest points here before the end of the day. And another important point is up here if it breaks through that resistance at 426. So keep those numbers in mind. Now, the 50-day moving average is slightly above that, right? It literally is. It's slightly above that. Let me go ahead and get this green line to the T, because our resistance here is slightly below it by 1 cent, or literally to the T on it. Yeah, so our resistance and 50-day moving average are exactly the same. It's 413. So if the bulls are able to break through that, they got back into bullish territory, and they need to pull away from it, turning it into a support so that they can go ahead and create this upward movement and go ahead and create a staircase effect to go on into the next high and the next resistance level. So super important for the bulls to break through that. That's going to be a very interesting tug of war, because we're really close to the 50-day moving average, and the bulls haven't had a chance to fight back, and this might be the opportunity this upcoming week. But they need to turn this into a support, and they need to go ahead and break through that bullish territory, because this is 413 to the hundreds or thousands place, a little bit different than honestly the 50-day moving average, but it's literally within the same cent frame and so forth. But the bulls need to break through this. They need to break through 413 so that they can reach newer highs and newer resistance levels. Now, our support here is important because it was touched twice in the day, 2 times in the day. It got broken through, and those are the lowest points reached in this bearish run. That is 393, as I stated earlier. We're currently at $4. If 393 does get broken through, I'd monitor this very closely and see how quickly this is hitting newer lows and pulling further away from the 50-day moving average. It's super important to keep that in mind, because this will then hit newer lows, newer support levels, and pull further down into bearish territory. So super important to keep that in mind and pay very close attention to how the stock is reacting if it breaks through 393, and how quickly is it moving down to newer support levels, or are the bulls even trying to reappear. So this tug of war is going to be interesting this upcoming week. I hope that with these cues you guys are well prepared for Monday's trading day. And as always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.